Well, let's talk to Vicky Pryce, the international economist and business consultant. Vicky, what do you make of these figures?
It's not greatly surprising, but what is surprising is that there are big differences within that overall figure. So we're talking about the European economy basically sort of flatlining at the end of 2023, but within that, yes, Germany falling GDP in the last quarter. Yes, France, really no change in GDP then. But then you have some of the southern European countries doing considerably better, which include, of course, Spain and Italy and Portugal. And it's interesting because Spain saw an increase of 0.6% in terms of growth in GDP in the last quarter. And the previous quarter, it had seen growth of 0.4%. So there are different trends happening in different parts of the EU. And it's not hugely surprising that Germany, which has been particularly badly affected by the developments in the gas supply side and exports, of course, to China, which have suffered, is doing worse than others, whereas those that are not that dependent on China and exports more generally, or on very energy-intensive industries, which they then rely on for exports and growth, those countries have done better.
Well, let's just look at that good news. There isn't much of it to be had, but Spain, Italy and Portugal, as you say, going like the clappers compared to everybody else, relatively speaking. Why are they doing so much better?
It's really interesting because, after all you've seen is a decline in inflation happening across the EU and wages only recovering a little bit. But in those countries, it seems that confidence has come back, particularly for the household sector. Remember, those countries also have had the benefit of a very substantial increase in tourism, which took place over the summer, of course, post-COVID. In fact, in some countries, the numbers of tourists coming is even greater than was the case before. And they have really benefited from that increase in demand that has taken place. That has given confidence in terms of the construction sector in particular, where we've seen, Southern Europe actually finding itself once again in a sort of, quite a positive situation about house building, which is really good news for them since construction is such a large part of the economy, the property market. So they have benefited from that. So the question is how fast that can also spread across the rest of Europe, because wages are beginning to pick up across many countries, and there are some areas where you do have a bit of a real increase in wages, but it's been a lot slower getting there than, for example, in the US and, for example, also here in the UK.
I mean, let's be fair, recession in the Eurozone was narrowly avoided. I mean, that was a huge relief, wasn't it, given the persistent high inflation, the likes of which we haven't seen for decades?
Well, it's not so much the inflation, which has been coming down very, very fast anyway, frankly. So if you see, some countries over the last few months have seen deflation. So, for example, the Netherlands saw that for a bit. We've seen that also happening in Belgium. You've seen also in Spain, where you're seeing a bit of an increase now in inflation, also having inflation below 2%. What is the real problem, and has been the real problem in Europe, is the high interest rates, which for this type of inflation environment are perhaps no longer justified. So they need to come down. And I think the European Central Bank acknowledges that, more or less. It's going to look, it said, at what happens in growth in the first quarter and then rethink its policy. So the expectation now is that perhaps we're going to see a slightly faster reduction in interest rates than would otherwise be the case.
Vicky, great to see you. Thanks so much for coming on the programme again. Vicky Pryce, the international economist and business consultant.